Welcome back to Squawk Box. Nvidia CEO and co-founder Jensen Huang receiving a 60% pay increase last year. His company's share price and revenue soared. His comp, here's the price, $34.2 million last year, up from $21.4 million the prior year. Among the increases, stock awards valued at about $7 million. That's more than the prior year, and also a $4 million cash bonus. He's also going to receive $2.5 million for other various costs, including residential security and consulting fees. But then, of course, that's all like pocket change compared to the stock that he owns in the company.
Can we agree on this?
Yeah.
That he's worth 3 times that in any...
But he also got it in the stock performance.
Okay.
And he's an owner.
But that's not... So the number is much higher than $32 million.
Yeah, because you got to think about how much stock the guy owns.
Okay, so he's got stock, but you usually get... Look at other people in media that get options.
Yes, I agree on that front. If we were talking on a relative basis to certain industries that are highly paid.
Right. Well, I'll tell you, I would imagine there's a lot of New York City taxi drivers that have been talking about Nvidia, and we just had an investor who said, given the historical cyclical nature of the chip industry, be careful with a company like Nvidia after the run-up that it's had. Now, this is their earnings come later in the reporting period. We've already gotten through the big technology companies, so we still are waiting for Nvidia's results. What is the current Dan Ives view on Nvidia?
It's the godfather of AI, Jensen Nvidia. In other words, this is the early part of this AI revolution playing out. 1995 moment, not 1999. So when I look at NVIDIA, anytime you have the sell-off, you just continue to own the stock. Because you look at NVIDIA, Microsoft, now this AI tidal wave coming through. If Jensen's flying the plane, I'm in 29E feeling pretty comfortable.
Under Jensen Huang's unmatched leadership, Nvidia Stock became the darling of AI and tech investors, and now that the company is reporting its first quarter earnings on May 22nd, all we can do is hold our breath and wait. Still, many analysts are expecting stunning results. One of these analysts is Wedbush's Dan Ives, as we have seen. But what really adds to the Nvidia bull case is a new estimate by HSBC analysts, and it's their expectations for how much the new Blackwell GPUs will cost. We all know that HSBC recently set a price target of $1,350 on Nvidia stock, indicating an upside of nearly 50%, but their new Blackwell estimates are even more bullish than this. So, in today's video, we will go over why HSBC thinks the much-anticipated Blackwell chips will be the next big catalyst for Nvidia this year, along with its fully equipped server racks. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
What? Yes, and I agree completely on what Adam is saying about NVIDIA. It's the anchor of the AI halo. And I doubt very much that even if NVIDIA was to deliver an earnings report, which would be disappointing and we'd see the price decline, I don't think very many people would move so quickly away from NVIDIA. So, as I said, it seems to be the core anchor AI holding. What's interesting to me is what the effect is going to be of NVIDIA's earnings on the rest of the AI halo. Because if I take 3 names.
How about like critical?
So if I take 3 names, if I take Broadcom, I take Cadence Design, which I talk about a lot, and I take AMD, each of those stocks had their peak in March. Those stocks have done nothing over the last 60 days. They need something to resurrect performance, and it's really, they're reliant on getting something positive from NVIDIA to do that. So I really think the AI halo is where you want to focus on off this upcoming report.
Recently, Nvidia shared some critical performance metrics for its Blackwell accelerators when compared to its older Hopper GPUs in a post on their website. According to the company, the Blackwell GPUs will offer generative AI on trillion-parameter large language models at up to 25 times less cost and energy consumption than the Hopper chips. Also, they are said to simulate weather patterns at a 200 times lower cost while consuming 300 times less energy. The company also announced that its GB200 server with the B200 GPU will offer 30 times higher throughput while using less energy and lower total cost of operation compared to 72x86 CPUs. So, how will these new GPUs be NVIDIA's next big catalyst? Well, HSBC has the answer to this question. The bank estimates that NVIDIA's B100 GPU will have an average selling price between $30,000 and $35,000, which is at least within the range of the price of NVIDIA's H100. On the other hand, the more powerful GB200, which combines a single Grace CPU with two B200 GPUs, will reportedly cost between $60,000 and $70,000. As we all know, demand for NVIDIA's AI chips is already very high. According to Statista, AI chip market revenue will hit $341 billion in 2033, and NVIDIA has more than 80% of this market already, so expect the company to have the biggest stake in this number. But given that its new powerful chips could go for as much as $70,000 and companies need thousands of chips to develop AI technologies, we should expect NVIDIA's revenues to skyrocket even more in the future. Investors should keep in mind that NVIDIA may be more inclined to sell servers based on the Blackwell GPUs, rather than selling chips separately, especially given that the B200 servers are projected to cost up to $3 million apiece. With that being said, servers based on NVIDIA's designs are going to be much more expensive than the single chip. In fact, NVIDIA's GB200 NVL36 with 36 GB200 superchips consisting of 18 Grace CPUs and 36 enhanced B200 GPUs may be sold for $1.8 million on average, whereas the NVIDIA GB200 NVL72 with 72 GB200 superchips comprising of 36 CPUs and 72 GPUs could have a price of around $3 million, according to the HSBC numbers. And let's be real, it might actually end up costing quite a bit more than that, as these are merely analyst estimates. Also, when Nvidia CEO Jensen Huang revealed the Blackwell data center chips at this year's GTC 2024, it was quite obvious that the intent was to move whole racks of servers. So, let's find out why selling whole racks of servers is extremely beneficial for the company. Hello everyone, and welcome back to Investocracy. During this year's GTC event, Jensen repeatedly stated that when he thinks of a GPU, he pictures selling whole systems instead of standalone GPUs or superchips, and this would enable NVIDIA to absorb some of the premium earned by system integrators, which will increase its revenues and profitability. I mean, the NVL72 is estimated to cost around $3 million alone, so if a couple of companies purchase a couple of racks, this means that they will become money-printing machines for NVIDIA. But it should also be kept in mind that the actual prices of data center-grade hardware always depend on the individual contracts based on the volume of hardware ordered and other negotiations. As such, large buyers like Amazon and Microsoft will likely get huge discounts, while smaller clients may have to pay an even higher price than what HSBC reports. With that being said, it's not just HSBC that's expecting a lot from NVIDIA, as there are many analysts who believe that the company will smash earnings, and that's one of the reasons why they're bullish on Nvidia stock.
Jeff Pierce joins us to talk Nvidia. Not too early ever to start thinking about their earnings. We've already got a couple positive notes out this morning from analysts on semiconductors. We were talking Seagate, Western Digital earlier. Jeff, tell me about Nvidia. What's going on here? What's the news flow this week?
Yeah, I mean, of course, as you said, we've got earnings coming up next Wednesday, the 22nd after the bell. And, you know, we've watched the stock pull back a little bit since March 26th, but it began to rebound again about April 22nd. And perhaps some of that's, investors taking profit. Some of it might be some pressure from the new chips that we're seeing out there from their competitors. But nonetheless, we have analysts weighing in. Now, NVIDIA anticipates about $24 billion in revenue for Q1 at the midpoint. That would be about a 233% increase over what we saw last year. Net income, they're forecasting up about 416% at $5.62 a share. Deutsche Bank recently reiterated their hold rating with an $850 price target. They indicated shares pulling back indicating shares could pull back nearly 6% from Monday's close. The analyst said overall, they remain impressed with NVIDIA's best-in-class technology roadmap, and the AI fervor by the customers is likely to be sustained, yielding yet another strong quarter. However, they think that a lot of that AI-driven upside in the earnings is already kind of in there. They think that they're going to continue to see fundamental strength, but that's already well understood. Wells Fargo, on the other hand, a little bit more bullish, puts their price target at $1,150 from $974. We saw HSBC earlier this week reiterate their buy rating with a price target of $1,350. They're seeing, continued strong pricing power in the GB200 processor platform. They think Q1 quarter sales about $26 billion. They're also expecting the current quarter sales at around $28 billion, well above what we've seen in terms of consensus out there. So some strong words coming from some of the analysts.
According to Melius research analyst Ben Reitzes, Nvidia could beat its revenue guidance of $24 billion for the quarter by around $2 billion and guide for a further $2 billion in revenue growth in the current quarter. This forecast is more optimistic than the consensus on Wall Street, which calls for revenue of $24.51 billion for Nvidia's first quarter, rising to $26.52 billion in its second quarter. On the other hand, Melius is backing Nvidia to shake off competition from rivals and customers making their own chips to power artificial intelligence systems. In their recent research note, they said that hyperscalers talk big game about custom chips, but they still need to buy Nvidia's H100s to beat cloud estimates and complete internal initiatives, adding that they remain optimistic that Nvidia's share of inferencing will be strong, especially given the rise of video generation. Notably, Melius has a buy rating and added a $1,125 price target on Nvidia stock. With all of this in mind, should investors buy Nvidia stock before earnings? In my opinion, as long as GPUs remain the key for AI workload acceleration and Nvidia maintains its leading position in the market, the stock will look like a strong buy. What's even better is that the company is expanding into CPUs and networking, expecting multi-billion-dollar revenues, and its software and services also show promising growth. That said, analysts are almost singularly focused on the company's AI segment growth, and that's because this is the area of the business with the most robust growth potential over the long term. This is because demand for computing is expected to rise, and since it's expected to come from the AI space, Nvidia has a real shot of completely disrupting this emergent and rapidly evolving sector. And while Nvidia's forward PE ratio of 36 times may seem high, it's also true that the company's triple-digit sales growth justifies this multiple. However, Nvidia may have previously set low profit targets, potentially driving further stock growth. For now, we'll just have to wait and see. Still, analysts expect a sharp move ahead of Nvidia's earnings, with a 17% upside forecasted. Meanwhile, the company's recent earnings report showed substantial revenue and net income, but sequential growth slowed to 22%. However, such small bumps in the road shouldn't discourage investors. In the long run, Nvidia is a must-have stock in every investor's portfolio as AI is still in its very early innings of growth. But what do you think about Nvidia stock? And what are your expectations for Nvidia's earnings? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Nvidia is. If you would like to know more about the latest updates about companies like Nvidia, then go ahead and click on the next video on your screen.